Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Daybreak Weekend, our global look at the top stories in the coming week from our Daybreak anchors all around the world. Straight ahead on the program, a look ahead to the August jobs report in the U.S., what it could mean to Fed policy moving forward. I'm Tom Busby in New York.
I'm Stephen Carroll in London, where we're discussing the challenges facing the UK's government as Parliament returns from its summer break.
I'm Doug Krisner, previewing a major semiconductor conference in Taiwan.
That's all straight ahead on Bloomberg Daybreak Weekend on Bloomberg 1130 New York, Bloomberg 99.1 Washington, D.C., Bloomberg 106.1 Boston, Bloomberg 960 San Francisco, DAB Digital Radio London, Sirius XM 119, and around the world on BloombergRadio.com and via the Bloomberg Business app.
Good day to you. I'm Tom Busby. We begin today's program with the August jobs report out this Friday and what it could mean for the Federal Reserve at its September meeting. For more, we're joined by Michael McKee, Bloomberg International Economics and Policy Correspondent. Well, Michael, inflation steadily cooling, the U.S. labor market carrying a lot more weight with the FOMC for its next meeting now less than 2 weeks away. What do you expect to see in this August jobs report, and what will all of it mean to the Fed?
Well, it's important to the Fed. At his Jackson Hole comments, Jay Powell, Fed chairman, said that the risks have tilted now towards a weakening labor market, away from strengthening inflation. And inflation, as we saw on Friday's PCE index, still very contained, still continuing to slowly move down towards their 2% target. So they're keeping an eye on the labor market, in part because it's the one thing they don't have a lot of data ahead of time until this coming week, because we will get the ADP numbers, we'll get the ISM manufacturing and services hiring numbers, we get the latest jobless claims numbers and JOLTS. All of those things in 1 week are all the precursors to Friday's labor market report. Right now, what we're tentatively expecting is a sort of a return of job growth. Last month was 114,000. The feeling is we'll go back up to somewhere between 150 and 200,000. It's not going to be as strong as it was, but it's still going to be a fairly strong number. The most interesting thing is going to be the unemployment rate, because a lot of economists think that's going to go down to 4.2%, that the 4.3% we saw in July was sort of a one-off accidental increase, and that will change. And if that's the case, that'll make the Fed feel better.
Well, I mean, we have been seeing evidence of a bit of a slowdown, despite what we think will be, a 4.2% unemployment rate. The weekly jobless claims fluctuating, kind of up and down, but still actually historically very strong, though, right?
Very low. They've been so low for so long, with the exception of the weirdness of the pandemic, that it's hard to get an exact idea of where it is you have to be worried. It used to be in the 300 to 400,000 range. Now we're in the low 200s, and have been, other than that one brief period, for so long that even when they go up, people get a little nervous. But it doesn't appear that it's because anybody's being laid off. In July, we saw an increase because factories were retooling, and we normally see people go on unemployment during those periods. We had the hurricane in Texas, that sort of thing. And that's behind us now, and we're seeing still very low jobless claims numbers, and they don't seem to be indicating any problem.
Now let's go back to you talked about the PCE that came out this past week. Not only did we see inflation continue to edge lower, 2.5% was the headline, but also wages and salaries up as expected, but spending still better than expected.
Spending still better than expected, up 0.5%, feeds the narrative of the soft landing. It was up from 0.3 the prior month in June. The issue is, though, that the savings rate went down to 2.9%, first time in the twos except for 1 month in 2022 since the mid-2000s, 2006 to 2008. And it isn't clear how people are going to continue to afford that kind of spending unless wages and salaries continue to grow at a healthy pace. They grew okay, 0.3% during the month of July. But at some point, you have to wonder when people's spending gets exhausted.
The Fed wants to see inflation moving in the right direction. They're seeing the labor market where they want to see it. Mid-September, we have this Fed meeting. It looks like a sure thing that a cut is happening. The big question, how big a cut?
Yeah, Jay Powell all but promised a cut in September, so that's likely to happen unless we have some sort of data accident between now and then. The Fed would prefer to do 25 basis points. That's their history. That's what they consider sort of a normal move. There is a fear that if they did 50, it would suggest there's something wrong with the economy. They have to rescue it, and that then the markets would start pricing in more 50 basis point cuts. Now, if we do have a data accident that suggests the economy is significantly weaker, like some bad number from the employment report, then the Fed could go 50. They've left their options open. But at this point, there doesn't seem to be much support for doing that as a base case.
And there are still 2 meetings left this year. This calendar.
And the markets had been pricing 100 basis points move, 1 percentage point by the end of the year. That's starting to go out of the numbers as the numbers continue to come in good. And so people are basically thinking, people on Wall Street are basically thinking now 25 at each of those 3 meetings. And then it will continue into next year. I don't know that it really matters that we say by the end of the year because they're going to continue cutting as long as they think that they are restrictive. They don't know where neutral is going to be, and they say that we're going to just feel our way along till we get there.
I want to talk to you about something. The Bureau of Labor Statistics reported, this is about 2 weeks ago, that in the year leading up to this March, 818,000 fewer jobs than initially reported. How can that happen? Is it the gig economy? Who are these people that they mistakenly counted?
Well, a number of factors come into play. One is that there has been a big surge in immigration, and so there may be people who are being counted in the on the payrolls numbers that are not counted in this revision, which looks at unemployment insurance. And if you're an undocumented alien, you're not eligible for unemployment insurance, so companies wouldn't pay. That's one potential explanation. And another is we've seen response rates go down from companies since the pandemic, so they may not be capturing all of those who are at work. And then there could be just the fact that errors are made by companies sending in their data. The thing about these revisions is, first of all, as you mentioned, they only go through March of this year. It's the year prior to that. And then they get revised again before the data are actually changed, which happens in January. And we have seen in the past when there have been big revisions, they sometimes revise much of it away. And just this past week, Goldman Sachs said they thought the 818,000 would be revised down to 300,000. Now, I don't know how accurate they are on that, but it just shows you the range. So the Fed is looking past that, and they're not concerned at this point that we have a terribly weak job economy.
Okay, so a little far back in the rearview mirror since it was in March. Okay, the August non-farm payrolls out at 8:30 a.m. Wall Street time on Friday, and our thanks to Michael McKee, Bloomberg International Economics and Policy Correspondent. Well, we move now to take a closer look at the IT hardware space. Strong earnings results last week from Dell, thanks to sales of its AI servers. Also blowout demand last quarter for NVIDIA's AI chips. This week, though, we hear from Hewlett Packard Enterprise, HPE. So how will AI server demand impact HPE's results? For more, we're joined by Woo Jin Ho, Bloomberg Intelligence Senior Technology Analyst. Well, Woo Jin, let's start with what you expect to see in HPE's earnings this week.
The way I'm looking at it right now, I do think with your lead, AI servers is probably going to outperform. We've seen that with Dell outperforming as well as Supermicro outperforming on the AI server side. And I do think that AI servers are going to lift results in the quarter.
Well, HPE, a leading provider of server, storage, networking, consulting, and more for business customers. Are businesses still spending big to upgrade and update their AI technology?
Yep. So they're not there yet, right? HPE does have exposure to larger enterprises. From a relative basis, HPE's AI server exposure is much smaller. I think they're going to do roughly about $1.2 billion in AI server sales in the fiscal third quarter. Contrast that with Dell, which just reported last week. They did about 3.1 billion in sales in AI servers, and Supermicro did about 5.2 billion in sales. So, smaller exposure, but they do have a good footprint.
It's also got a partnership, right? HPE with NVIDIA to build a private cloud business. How is that going?
Yeah, look, it's still on the early days. It is part of HPE's broader strategy on driving a lot more private cloud. And NVIDIA is trying to look for a better footprint into the enterprise. And this would be a good marriage between HPE and exposing them to NVIDIA, exposing them to their install base, as well as HPE having access to NVIDIA's GPUs.
And I think that's good. Almost a decade after it split with HPE. Where is it heading now? Is it more toward those AI servers? Is it more toward just AI, or are there legacy businesses that are going to be around for a while with HPE?
Yeah, so if you look at HPE, it's much more than just the AI servers. They are one of the leading server as well as storage vendors out there. One of the things that I am looking for is a general broader IT spending recovery for their server and storage businesses. What I do think is that we are going to start seeing more signs of recovery in both of those businesses. Look, it's been in a malaise for the last several quarters, and I do think that with IT spending stabilizing, it's poised for growth for the next couple of quarters.
Now, you see some growth there. How about on the consumer side? We've seen the business side. The consumer, we know that last week we heard from Best Buy. They're expecting more sales of PCs, laptops, that type of thing, along with, of course, they sell a lot of home appliances. But are you seeing evidence of that? Are you seeing more consumer demand?
Yeah, and that aligns with more of their sister company, HP, which they split from several years ago, as well as we can glean into Dell's results as well. We are seeing, the uptake in consumer PCs for both HP as well as Dell has not been as strong as one had hoped. I do think it may be a sluggish second half on the consumer PC side. And also, if we think about it from a global perspective, we are waiting for a broader global recovery. PC demand, I think, is going to be muted, but there are some catalysts coming in 25, such as AI PCs, that could potentially help.
All right. HPE earnings out this Wednesday. Our thanks to Woo Jin Ho, Bloomberg Intelligence Senior Technology Analyst. And coming up on Bloomberg Daybreak Weekend, we'll discuss the challenges facing the UK's government as Parliament returns from its summer break. I'm Tom Busby, and this is Bloomberg. This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Tom Busby in New York. Up later in our program, Taiwan's Semicon Summit kicks off this week, and we'll discuss what this means for chip development in that country. But first, the UK's Parliament reconvenes this week, and for new Prime Minister Keir Starmer, after an eventful summer holiday filled with international engagements and settling into life on Downing Street, challenges await in Westminster. For more, let's go to London and bring in Bloomberg Daybreak Europe anchor Stephen Carroll.
Tom, Keir Starmer and his new government have been busy this summer. From diplomatic trips abroad to announcing and enacting new policies, the UK's first Labour government in 14 years seems eager to make its mark. Whilst Parliament has been on summer recess and the Conservative opposition largely fixated on their own leadership election, Starmer and his cabinet have been able to set the narrative. So far, it's been one of considerable caution. The Chancellor, Rachel Reeves, emphasised the scale of the spending black hole she says her predecessors caused, while the Prime Minister made a speech warning of painful decisions ahead. The supposedly gloomy outlook is something we've been discussing with Philip Collins, former chief speechwriter to Tony Blair. He says it's wise of Starmer to set expectations low.
Well, I thought it was a conventional speech in a way to do at this time in the early days of a government, because it's one of the things you want to do is to win time by blaming your predecessors. And everybody does a version of this speech. Now, it's particularly dramatic because of the riots, and also because the real concern I would have with this speech is that what Starmer says might be true. It may be that things are going to get considerably worse. I mean, you'd probably say that even if you didn't think they were, because you lower expectations. But I fear that this may be true. And I'm not sure that we didn't already know this was going to come. I think most people thought that whoever had won the general election, there was going to be some difficult decisions to follow, difficult decisions on tax and spending. And so I think in signaling that, although you're right, rhetorically, there are contradictions all over the place with the campaign, which had just gone before, and with some of the early words. But taken in isolation, I don't think that message that things are going to be bad and there's going to be something difficult to encounter now will come as a great surprise.
When you say sort of it won't necessarily come as a surprise, what do you glean from what Starmer said that might realistically have changed from what we can expect from Labour in sort of the coming months?
Oh, I don't really think anything has particularly changed. I think they always knew that when they look in serious detail at the public finances, there were holes there, and they'd have to take difficult decisions on tax. So I don't think in that sense anything has particularly changed. I mean, the riots, of course, are a major event which have changed the response and have changed the context. But as far as the budget is concerned, I think we are where we are. I mean, and Rachel Reeves gave that really rather dramatic and I think a little bit exaggerated statement to Parliament about the nature of the public finances and the sort of the fallacies of the information she'd been receiving. So there is a concerted attempt to say, look, this is a really bad state of affairs. We're going to have to do difficult things. It will get worse before it gets better. So but again, I'm not sure that's a change. I think that's just in fact the stark realization of what was always there.
Well, then to take sort of that idea that maybe the economic reality hasn't changed, but maybe the political context has shifted, in some ways this speech then becomes a challenge of political rhetoric of Starmer. Can he convince the public and the media that his vision is going to make the country a better place in the long run, to tie us up in his telling of what the government and the country should be like? Do you think he did it?
Well, that's exactly the question, I think, because there are two parts to the slogan, aren't there? There's things will get worse, but then the second half is before they get better. Now, it's that second bit that is, in fact, the really interesting part of it, because I don't think many people would doubt that things are going to get worse. People, as a rule, think things will get worse anyway, politically. It's the second part, but before they get better. And there is the promissory note that things will, in due course, get better. And there's a lot resting on that. And that's the thing which here, in the end, the political judgment will be on that second part of the slogan. Does the Labour Party have the resources, both material and intellectual, to change things around? On that, I don't think we know a lot, because the manifesto on which the Labour Party has just run was deliberately thin in policy terms. And I don't think we've seen a great deal since to tell us exactly what will be done to turn things around. So I do think that's exactly politically the question on which the government will be judged.
Is exaggeration a risk here? Is this reinforced message, which is coming now, it feels like a drumbeat since the election of, oh, things are really terrible financially and we won't be able to do anything and everything's going to be very difficult. Isn't there a risk too that people will just tune out, and then by the time the good times roll around that people won't be ready for that either?
There is a risk, always, of exaggeration, but I would once upon a time have thought that risk was severe. But then I watched George Osborne convince enough people that a global financial crash had been the result of a slight Labour overspend. And I thought, oh dear, well, clearly this works. So the risk is perhaps not all that great.
That was former chief speechwriter to Tony Blair, Philip Collins, speaking to James Woolcock and me on the Bloomberg UK Politics podcast. So as MPs prepare to head back to Westminster, what sorts of questions might await Keir Starmer at the dispatch box? That's something I've been discussing with Bloomberg's UK political editor, Alex Wickham.
The main thing coming down the track is the budget, end of October. So we've sort of got a 2-month run into that, where Rachel Reeves, the Chancellor, has her first big opportunity to lay out her tax and spend plans. And it's a huge budget. We've had some pretty big budgets over the last few years, but this is the biggest of any of the recent ones. We will get to see whether tax rises are coming for the wealthy, probably, but potentially for everybody. And that will be a huge moment for the Labour government, and whether they can manage these really difficult balancing acts that they've got between keeping the public's finances on a sound footing. Labour are constantly telling us that they've inherited a really bad picture on the public finances. They need to not choke off economic growth and wealth creation, which they say is their number one priority in government. And being able to find a way to do both of those things is a big challenge, and certainly the main thing that we'll all be looking out for when Parliament comes back next week.
How much have we been warned, I suppose, about the bad news that is to come? Because in the past few days we heard from the Prime Minister telling us that there were painful decisions ahead, pointing us towards, as you have, the budget at the end of October. Is this them setting a tone for what's going to be a fairly rough ride when it comes to the difficult decisions that have to be made?
It is. They are being pretty upfront about the fact that they're going to be making some very unpopular decisions. Labour said during the election campaign that they didn't want to put up taxes, that they had no plans, as we kept hearing, to put up taxes beyond a small select few that they announced in their manifesto. And it turns out that they are going to put up more taxes than they were saying. And their argument is that, we've looked at the books and things are worse than we thought. Well, yes, maybe, but I think many would have suspected that this was coming regardless of what they'd found. And, on the flip side, Rachel Reeves has her own party to manage as well in this budget. There will be Labour MPs and indeed cabinet ministers who want more public spending for either their departments, whether it's justice or health or whatever, education or whatever, but also on things like welfare. Crucially, there's the 2-child benefit cap, which Labour MPs really want to be lifted at some point in this Parliament. Doesn't look like there is any money for it at the moment, but Reeves will come under huge pressure to have something positive to say as well amongst all the doom and gloom.
What are the other key policies that you're going to be watching out for coming through the parliamentary process as MPs get back to business?
Well, we're still awaiting details on some of Keir Starmer's plans on things like immigration, where he said he's going to set up a new border force to deal with irregular migration across the English Channel. That's a major test for his premiership as he comes under pressure from right-wing parties, and he certainly will do towards the end of the Parliament. Whether he can get on top of that is a major unknown. Fixing the NHS, which has been ridden with strikes over the last few years, and long waiting lists. That is a key priority for Labour voters, but all voters, and he needs to be able to show progress there. So there's a real lot of unknowns about what policy Keir Starmer is going to come up with over the next few months, and the budget will be the first time that we get to see them.
Oh, keeping you and us busy in the meantime, Alex. The other thing to think about, I suppose, is that Keir Starmer was elected with this fairly hefty parliamentary majority as well. Are there going to be questions over Labour Party unity as the party gears into sort of the main business of governing and some unpopular choices?
I think so. And, even over the last few weeks, we've seen early creaks of unity on things like winter fuel payments, which Rachel Reeves said at the beginning of the summer or the middle of the summer that she was going to remove this winter fuel allowance for pensioners. Now, that has proven highly controversial within the Labour Party. Funnily enough, if you're a Labour MP and you've got lots of pensioners in your constituency, and pensioners tend to be the people who vote, turn out to vote, they're not very happy about it. And there are many pensioners who are, not well off, who will struggle to keep hold of this allowance, and that is going to be, an unpopular policy. Rachel Reeves is sticking by it. She insists no U-turns, no backing down. These are the unpopular decisions that she has to make because of the fiscal inheritance that's been handed to her. Well, yes, but we'll see whether that stands the test of time. We're already hearing that she's now having to come up with new ways to sort of finesse this policy and take soften some of the rough edges on it to keep Labour MPs happy. And that's a sign that even with a big majority, Keir Starmer is still coming under pressure from his own MPs and from within his own cabinet. And for a politician who prizes unity and professionalism and all of that above all else, that will be an interesting test.
And Alex, just a thought too on the leadership race for the Tories as well. Of course, now in opposition, what will you be watching out for in those party dynamics?
Well, it's a long way to go, and I think quite an open race, to be honest. You've got Kemi Badenoch, probably still just about the front runner, but Robert Jenrick's made an interesting sort of the last few weeks getting out and about and sort of perhaps outperforming expectations and rising up the ranks in the polls. So it'll be interesting to see whether the front runner, Kemi Badenoch, can continue that momentum. She hasn't done a great deal of campaigning over the summer. That sort of starts now as we head back to school, as it were. And then whether the likes of James Cleverly, Tom Tugendhat can make enough of a splash to get attention on themselves is the other difficult thing in the media ahead of Tory party conference where things start to get serious.
Thanks to Bloomberg's UK political editor Alex Wickham. I'm Stephen Carroll in London. You can catch us every weekday morning here for Bloomberg Daybreak Europe, beginning at 6 a.m. in London and 1 a.m. on Wall Street. Tom?
Thank you, Stephen. And coming up on Bloomberg Daybreak Weekend, a look ahead to Taiwan's Semicon Summit. I'm Tom Busby, and this is Bloomberg. This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Tom Busby in New York. Semicon Taiwan kicking off this week, and that's where high-level discussions on the latest chip industry trends and solutions take place. Let's get to Bloomberg Daybreak Asia co-host Doug Krisner for more on a preview.
Tom, the enthusiasm around artificial intelligence has made the chip industry the hottest area in information technology. Now, to be fair, not all chip makers are benefiting equally. Clearly, the dominant force is NVIDIA. Its graphic processing units have become the backbone of AI computing. But in building AI infrastructure, those GPUs must be paired with high-bandwidth memory chips. And the lion's shares of those HBMs are produced in Asia. Earlier, I spoke with Mario Morales, Group Vice President of Enabling Technologies and Semiconductors at IDC. The question is whether HBM chip makers will be able to keep up with demand.
We're not seeing the weakness. In fact, since probably September of last year, the memory companies began to change their operations in order to get back to profitability, but demand returned, especially from the data center. And today, we're expecting that both DRAM and NAND will grow significantly from a revenue basis, close to 73% in terms of revenue growth. So very phenomenal growth. A lot of that led not just by high bandwidth memory, but also DDR5 that's being used in the flagship smartphones and the upcoming AI PCs that we'll see later during the holiday season. I think in general, the demand for memory will still remain robust this year and likely into 2025.
That is Mario Morales from IDC. So let's circle back to what we heard in the last week from NVIDIA and the company saying it is now working through production snags with its highly anticipated new Blackwell GPU chip. I spoke about this with Dan Newman, CEO of the Futurum Group, and really wanted to get at how this may impact those high-bandwidth memory chip makers.
I think this continues to be the reason why, whether Blackwell is a little bit delayed or not, they're going to produce as much of the hopper as possible. The overall situation as it pertains to memory is they're also constrained there. So you heard me talk about 3 nanometer constrained, CoWoS constrained, and of course, HBM constrained. So right now, you are literally seeing these 5 or so major hyperscalers plus global hyperscalers and tier 2s taking up the vast majority of the demand for all of these major parts of the supply. And you know, Jensen talked about it being around 45% coming from the 3 or 4 biggest, but they are taking most of the demand. And until we can expand capacity, so it's on Micron, which is investing, it's on SK and Samsung, all of which are investing, but it can't happen fast enough. This does take time.
He is Dan Newman from the Futurum Group. I think it's fair to say that high bandwidth memory chips will likely dominate the conversation in the coming week at the Semicon Taiwan 2024. To preview the event, I'm joined by Bloomberg's Jane Lee. She covers the chip industry, and she joins us now from our studios in Taipei. Jane, thanks for making time. Is it fair to say, was I right in saying that high bandwidth memory chips are going to dominate the conversation at Semicon?
That's absolutely right. In fact, this Semicon Taiwan is different from previous years. Taiwan and South Korea are two sort of rivals when it comes to chip making. Samsung is a rival of TSMC. When it comes to logic chips. And so oftentimes in the past, the Samsung or SK Hynix might have sent over, a mid-level manager, and they weren't in the keynote. They were barely even noticeable. This time, the SK Hynix president, Kim Joo-sun, and Samsung Electronics head of memory, Lee Jung-bae, are both giving keynote speeches and are quite high-profile set during the conference. So it's kind of a rare thing. And the reason for that is, as you point out, the high-bandwidth memory chips. Before, when Samsung and TSMC were just rivals over logic chips, they were rivals, but now they're going to have to start to work together as Samsung tries to get into the HBM business in a much bigger way. It's kind of behind SK Hynix, but it definitely is aiming for NVIDIA's business. And when it does that, it will have to ship those HBM chips or the wafers they're on over to TSMC or TSMC's partner that packages those together. So this time, Taiwan and South Korea are both prominently featured at Semicon Taiwan, so that'll be quite interesting. The other thing that will be highly watched is packaging. Because the HBM and the GPU that NVIDIA provides will have to be packaged together, this new advanced packaging, which is called CoWoS, chip on wafer on substrate. It's basically the newest technology to pull these chips together to make them work like one. So a lot of those technologies will be highlighted, and this technology of advanced packaging is also in short supply. TSMC has said that they will double the capacity by the end of the year, and next year double that again. So a lot of people will be very interested to see, how that's going and what kind of other future technologies there are to bring all these different chips together, because Moore's law is kind of dead.
It's interesting. If you look at the history of TSMC, there was obviously a lot of government support on the part of Taiwan. Here in the States, we're dealing with the Chips and Science Act as a way of trying to provide some support for the industry and keep it growing domestically in the United States. I'm curious about the role that governments are playing right now, whether it's Taiwan or South Korea. Are they heavily involved?
South Korea and Taiwan are both heavily involved. There's always tax incentives and large programs in the billions that are rolled out to support the domestic chip industry. That's not going to change. Part of the problem, though, and what's interesting for me when I watch the U.S. government roll out the CHIPS Act and bring TSMC and Samsung to build more fabs in the U.S., they're saying that they're going to do this to resolve a supply chain issue. It's for national security. But the fact that is not often talked about is that these wafers, once they're printed in those U.S. fabs, they still have to get on a plane or a ship to come back to Asia for this next process of advanced packaging. So, in fact, we don't talk about it a lot, but the CHIPS Act is not solving completely the supply chain issue that we all think it should. And so that'll be something that we should all watch going forward. And once TSMC's fabs are up and running, I think that issue could be pointed out a lot more.
Well, insofar as TSMC's production in Taiwan, obviously this is a foundry, they're the manufacturer, and there may be a little bit of concern, particularly when you hear what NVIDIA had to say about whether or not TSMC is going to be able to keep up with demand. Again, Here is Mario Morales at IDC.
That's continued to be the theme, right, for over a year now. I think last year we saw a correction in the semiconductor space, but when you look at TSMC, they tend to buck the trend. They're a very strong player in the foundry space, the leader. They control almost 60% of the market. Where they're investing heavily now is in advanced packaging. So when you hear about CoWoS, all of that means is that that's where they're seeing the big investments that they need to make in order to serve companies like NVIDIA and Broadcom and AMD and others that are now beginning to use more advanced packaging in order to continue to drive integration.
He is Mario Morales of IDC talking about expanding capacity at TSMC. Let's get back to the issue at hand, Semicon Taiwan 2024. Bloomberg's Jane Lee is with us from our studios in Taipei. Do you think there's going to be any news made out of this conference?
The conference generally doesn't really create news. It's not been an area where executives come to unveil big news. They kind of do that on their own home turf or in their big conferences. But the one thing that people are talking about ahead of the conference is whether or not Jensen Huang, the CEO for NVIDIA, is going to show up or not. Korean media earlier this year speculated that Jensen Huang and TSMC's possibly CEO and SK Hynix's president would have a fireside chat. But that's not really shown up on the agenda, and NVIDIA is declining to confirm whether or not Jensen will be coming. And so the chatter is he coming or not? And some teams are also deciding how many people they send depending on whether he is here or not. It's one of those things, like almost like a high school party where if this person comes, I'll come, but if he's not going to be there, I'm not coming either. So it's quite amusing. And the reason for that is because Jensen made such a splash during Computex, which is the other big Taiwan conference that was held in early June. And for that, everybody else showed up because he was here. AMD CEO Lisa Su came. Pat Gelsinger, CEO of Intel, came. And they were all going around and signing servers and hardware for their suppliers and customers. So it was quite the feast. So people are trying to see if Semicon Taiwan will be another one of those events. Semicon is generally more of a technology conference where future technology is discussed. So we'll have to wait and see, but everyone's getting excited for him possibly showing up again.
Jane, before I let you go, I have to ask, one of the things that the Biden administration has obviously imposed on China is a restriction on some of the high-end, the most advanced semiconductors, many of which are made by NVIDIA. That's part of that story, obviously. And I'm wondering how the suppliers in Asia are feeling about those restrictions and how it's impacting their businesses.
That's really interesting because these export control on NVIDIA AI chips into China has really changed already the flow of trade. Because China can't get these chips, they cannot build AI servers that they might have built or that they used to build. And a lot of that business is coming to Taiwan. And so that's pretty visible when you just look at the trade number, exports of AI server-related parts from China versus Taiwan. And so it's having a real impact. And Asian companies are having to pivot and change their business accordingly.
Jane, thank you so much. We'll have to check back. I know you're going to Semicon Taiwan 2024 to cover it for Bloomberg. I'll be interested in reading your reporting, and maybe we can have you on the radio to talk about it further. Bloomberg's Jane Lee joining from our studios in Taipei. I'm Doug Krisner. You can join Brian Curtis and myself weekdays here for Bloomberg Daybreak Asia, beginning at 8 a.m. in Hong Kong, 8 p.m. on Wall Street. Tom?
Thank you, Doug. And that does it for this edition of Bloomberg Daybreak Weekend. Join us again Monday morning at 5 a.m. Wall Street time for the latest on markets overseas and the news you need to start your day. I'm Tom Busby. If you're listening to us in Boston, our new home starting September 3rd will be 92.9 FM. That's the day after Labor Day. Bloomberg Radio moving to 92.9 FM in Boston. Stay with us. Top stories and global business headlines are coming up right now.